We start the week with YTL Corp following its recent results where MIDF believes that the worst should be over. It already had a buy call on the stock, but MIDF upped its target price from 79 cent to 83 cent. Based on current levels, this implies a possible upside of almost 50%. YTL reported a core net profit of 11 million for its first quarter of FY23, which was weaker than expected for both MIDF and consensus estimates. The weaker than expected result was primarily due to weaker earnings from the cement division that were partially offset by stronger than expected performance of its utilities division. But this was a significant improvement versus the core net loss of 124 million registered in the first quarter of FY22. Its utilities division was driven by the strong performance of Suraya, where its earnings more than quadrupled on the back of higher demand and higher tariffs in Singapore. The cement division registered a sequential drop in PBT despite growth in revenue as margins were impacted by peak coal prices during the quarter. However, market coal prices have peaked and have eased reasonably, and MIDF expects this to improve the cement division's earnings from the second quarter of FY23 onwards. The hotel division continued to show progressive improvement with its maiden profit in the first quarter after suffering almost 8 consecutive quarters of losses due to the COVID-19 restrictions. Despite the weaker than expected results, MIDF raised FY23 and 24 net profit slightly by 6% and 3%. Only 2 research houses cover YTL Corp, and aside from MIDF's buy, CGS-CIMB has a hold on the group. This shakes out to an average target price of 70.5 cent, exactly 15 cent more than its last close.